If you are a big investor in Chinese assets, this is not the headline that you want to read. Alibaba, Tencent Music, and Didi extend losses amid Chinese stock market rout. We're going to be talking about all of this and more and how it affects Alibaba, Didi, and what you can do about this situation. Welcome back to another video. My name's Adam. On this channel, we talk about my investments, finance-related advice, as well as market psychology. And right now, in terms of market psychology, there is fear and blood on the streets when it comes to Chinese stocks. You look at something like Alibaba, for example. This is a billion-dollar company, $500 billion market cap right now. And I mean, over the past 6 months, it's down by 28%. And that's just, for a company with billions of market in terms of its market cap, that means there's a lot of money, especially like hedge fund money, not just retail traders, selling out of their shares. And there's a crisis among a lot of these internet tech type companies in China that are increasingly getting pressured by the Chinese government to do this thing or another, which we're going to be talking about. For example, in the education space, China wants certain subjects and tutoring companies to become non-for-profit organizations, and now they're currently for-profit organizations. And so, for example, this sent TAL Education Group down by 77% just this past month. This past 6 months, it's down by 92%. I mean, today we see it's up by 25%. Maybe some people are interested in this stock. I actually purchased a couple of shares to see where this plays out, and I'm liking this 25% move here. So a lot of speculation, a lot of fear, a lot of FUD in the markets right now, pushing the price down. So let's start with Alibaba, and I mean Cathie Wood's ARK Invest is also increasing in terms of its selling pressure on positions like Alibaba, JD.com, and Tencent. You look at the combined ARK Invest ETF trades, and this is just July 26th. This is a Chinese company, BEKE. You look at JD, they're just selling these positions. Just, oh man, completely just, they're buying Coinbase, but they're selling all these Chinese stocks. Again, another sell from JD on the July 26th, which was yesterday. Then we come down here, July 26th, they sold Alibaba. To be fair, it was only 7,970 shares, but still, they sold more Alibaba here. This was actually 99,000 shares. They sold Baidu here. So all these Chinese companies are just like, ARK is shedding their positions in Chinese stocks. Now, is Cathie Wood right to do this? I mean, I think she has to be more careful as she manages an exchange traded fund that's based in the US. So for example, if Alibaba were to get delisted, this would put more negative pressure on the stock price and would basically mean that Cathie Wood would have to force sell because she's probably not allowed to buy any stocks that are sort of like over-the-counter type stocks, only the ones that trade on the New York Stock Exchange. So a lot of hedge funds, a lot of retirement savings accounts, insurance companies, they're taking a sell now and talk about it later type approach when it comes to Chinese companies. And I mean, we're feeling the heat, right? You're talking about billions of market cap just wiped off of Chinese companies. And if you're invested in Chinese companies like I am, Alibaba is one of my top holdings and actually one of my main bull like thesis points right here when it comes to Alibaba. I mentioned that it was like the Amazon of China, but one person in the Discord, shout out to Andreas, said that, you know, it's more like the everything of China. Okay, so there's something for everything when it comes to Alibaba. So Alipay, that's online payments, that's similar to PayPal. AliOne, cloud services similar to AWS, which is huge, and they actually started to become profitable in that. They have a mobile platform, mobile apps similar to Google Play, maps and navigation similar to Google Maps. They have retail outlets, group buying, cloud storage like Dropbox, mobile messaging, which is similar to WhatsApp. It just goes on and on and on. B2C e-commerce similar to, of course, Amazon.com. E-learning similar to Kaplan. Music streaming like Spotify, and streaming video like Netflix. And these are all the subsidiaries there. So it's a huge network. And Andreas, thank you so much for pointing this out to my attention. But yeah, we talked. So if you want to join the Discord group, there's a link down below. I'm so bullish on Alibaba, and as his price keeps dropping, I'm just buying more and more Alibaba. And I mean, like, come on, in the past 6 months, down 30%. And when you look at the earnings, you'd think that, okay, the stock is down by 30%. Sure, they slapped on a fine and that impacted their bottom line for like 1 quarter. Okay, here they still had positive earnings. The estimate was $1.72. They hit $1.59 of Q1 2021. But you look at the previous quarters, it's just up and away. All right, and the past 6 months, this stock has been downtrending by 30%. It just makes no sense to me, even among all the FUD going on with Chinese stocks. Right? You look at the annual financials from 2018 to 2019, basically tripling the revenue here. It's just incredible, and again, just not in line with what the stock is supposed to be doing, in my opinion, right? And this will continue to be a growth beast despite the fines that are placed on Alibaba and other Chinese stocks. And at the end of the day, I think it's within the Communist Party's best interest to not clamp down on these Chinese stocks too much, all right? Because it's China's prized possessions, right? That's their way of competing with America, right? You have Alibaba in China, you have Amazon in the States, right? So, for every one of, you have Google in America, you have Baidu in China, right? So China does want to compete, right? It just wants to sort of control these in a more regulated way as it tries to gain more power, etc. And I mean, this article is pretty good. It talks about why Baba is going lower. Part of it is, of course, first the Ant Group IPO that caught the unwanted attention of China and sent shares in parent Alibaba tumbling. So that was number one. Then recently we had the Didi saga, which again hit Chinese shares. Didi, basically what happened there was Didi went ahead with their IPO, even though the regulators in China were like, oh, hold up, you're not following all the rules. We want to take a look more at your financials before you list. Didi listed anyways, and their IPO went through. However, you look at since IPO, this stock is down 43%, right? This is basically the Uber of China, and except bigger than China and more profitable from what I've heard. 38 billion market cap. I mean, just absolutely hammered. Right, since its highs, over 50% down in the span of a couple of days. So that was a second, and it's called like sympathy trading, where basically if a share of a Chinese company goes down and it's like large scale news, that also puts downward pressure on all the Chinese assets. So that was the second thing. This time the IPO got away, but Didi has been hammered since, as we've seen. Now it is the turn of education and real estate stocks. China over the weekend said it would not allow for-profit tutoring in some core subjects. And here you go, TAL Education Group, past 5 days down 71%. Past year down 93%. This used to be a $90 stock, 52-week high of $90.96. And whoo, if you invested, I feel so sorry, down over 90%. So that's telling you why Alibaba went down. And even when you think China's risk is priced, it can get worse, Goldman Sachs wrote in a research note. On top of this, there's an article by The Motley Fool, why Alibaba stock just fell 4%, and this was written yesterday. And Alibaba shareholders in particular have something even more specific to worry about, the digital yuan. So the Chinese government is pressing tech giants Tencent Holdings and Alibaba affiliate company Ant Group to help develop a new state-backed digital currency, or a cryptocurrency, to be dubbed the electronic Chinese yuan. This is bad news for Alibaba because Ant operates the Alipay digital payments networks already, and the emergence of a competing cryptocurrency brings the risk of eroding the huge user base that Alibaba and its affiliates have built up over the past decade. I totally agree with this. However, Alipay will still be a thing, even if the Chinese online cryptocurrency, or the yuan, electronic Chinese yuan, becomes a thing. Alipay will still be a thing, all right? Ant Group will still be a thing, although a subsidiary and hopefully complies with the market regulations that China is imposing right now. It'll still be a thing. And on top of that, like we said, Alibaba dominates in so many spaces, not just Alipay. Sure, that's a big thing, but they'll still have all that treasure trove of data to go through, and they'll still act as an online marketplace, right? So, I mean, I don't think this is too concerning right now. And of course, they probably Alibaba won't have any option but to comply with Chinese Communist Party. So that also might be the reason why Alibaba stock is going down. But I mean, overall, like, I think this is the time to buy. Again, I've said this again and again. When there's blood on the streets, you want to buy. And I mean, a lot of people are like, well, why did the U.S. IPO underwriters at, Goldman or wherever, why do they go through, and what are they saying now? Well, DD stock IPO underwriters go silent as volatility dominates. So this just tells you, I mean, there's a lot of uncertainty, there's a lot of fear, a lot of people are not speaking up, a lot of people are incredibly angry, they want some answers, and nothing is happening, right? And I think, again, in these times of uncertainty, you can either kind of stay back in fear and not do anything, or you can go and take a risk, take a chance, right? Without risk, there can't be reward. And you might say, well, you might as well just put it in a safer play. But I think, like, okay, sure, you could put it in a safer play, potentially get 8% return over the next couple of years. But I want to invest and I want to get 100, 200, 300% in the next couple of years. Okay, so that's why I'm investing in these stocks. So again, not for everyone. Don't put all your life savings into Alibaba. Put money that you're willing to lose, right? But if you have risk tolerance, I mean, just an incredible company, Alibaba. Even Baidu, right? I invested more in Baidu. TAL is a more higher risk, higher reward type play. And I think that, again, it's unnecessarily beaten down. Let's take a look at the chart, potentially look at the technicals, see what's going on there. Yeah, right now, I mean, not necessarily finishing. Yeah, this stock actually finished totally below the lower Bollinger Band, which is a buy signal if I've ever seen a buy signal. Sure, the selling pressure could continue until Alibaba hits, I don't know, potentially $170. Let's zoom out. Let's see what the 1 year trend is. I mean, we've never been this low, even in the past 2 years, maybe. Yeah, let's say maybe the $170 level will become resistance. I mean, we'll just have to see what happens over the long term. But as Alibaba continues to go down, I will keep on buying shares gladly. So thank you so much for watching this video. Please be sure to hit the thumbs up, subscribe to the channel if you haven't already. Let me know what you think of Chinese stocks in general, which Chinese stocks you're buying. Again, please feel free to check out the free Discord right here below. There's a link to it down below. As well as if you'd like to support the channel, feel free to check out all the links down in the description below. You can gain access to my real-time buys and sells and talk to me through that way. So I appreciate all the support. Take care, and until the next video, I'll see you guys later.